morning and welcome to Trading with Larry. Larry can't make it today, 2 days in a row, but you're joined with myself and Larry's right-hand man, Clint Brewer. How are you, Clint? Good morning.
Good morning. You get me for one more day at least.
Oh, that's not a bad thing. I enjoy when we talk. We exchange good notes, and I hope people get a lot out of that. It gives me a lot of ideas, so that's okay with me. Um, Big story out, obviously, Nvidia earnings last night. Underwhelming, I think, is an appropriate term. Underwhelming. I think people are starting to throw out the word concentration risk in their revenue. Uh, you know, just two clients make up like a big percentage of their data center revenues, and now concentration risk is an issue. But you look up at the board, and just to preface Nvidia's performance into this earnings report, the straddle, the options market was pricing in just like a 6.5% move up and down. Even that looks like it was too much because the reaction was maybe down 3%, and right now it's down just what is it? Just like
1%,
1%.
a little over 1%. Yeah.
Yeah, futures market shrugged it off. Maybe a little bit of weakness in the Nasdaq for about 150 points, but the S&P never really moved down in a big way. And recovery last night. Um, Here we are again. The market ignoring an underwhelming earnings report from a stock that is 10% of the NASDAQ index. So there's concentration risk within Nvidia, there's concentration risk in the index. When is the market going to care, Clint? When?
You know what? I mean, we'll see if this is the beginning of the end, so to speak, for Nvidia's run. But I think here's what a lot of investors miss is that when you're looking at the performance, the quarter to quarter financial performance in these high growth stocks, especially, it is the rate of change that matters a lot. Um, Investors want to see, especially institutional investors. There's a quant factor called analyst revisions, and it performs very well. It's very well aligned with momentum, and it says that stocks that are seeing positive analyst revisions go on to outperform. And so you want to see analysts, raising growth estimates for the next quarter, for the out year, and so on. What you don't want to see with these high growth stocks is that rate of change and their fundamentals start to slow down. So like Nvidia can come out and they can hit it out of the park, and they can come out and say we had 50% revenue growth in the most recent quarter. But if that's starting to slow, that could call into question, is it worth paying 40 times next year's earnings to buy a stock who's starting to see a slowing revenue growth rate? And so there's a couple of numbers in their earnings report that stood out to me. One is, look, yeah, they beat on the top line, they beat on the bottom line. I saw somewhere that this is the ninth straight quarter that they've had 50% year over year revenue growth. But of those 9 quarters, this is the slowest one. So again, you're looking at the number and you're like, wow, 50% growth for the ninth straight quarter, that's really good. But if that number is going to start comping against more difficult numbers, like if they've been doing this now for 2 years in a row, that number, that growth rate is going to be going against a harder and harder number each coming quarter. And again, in my opinion, to justify paying 40 times next year's earnings for this stock, they can't afford to see that growth rate start to trail off. And so if you start to see any kind of cracks in the underlying AI spend, here's another crazy stat I saw. Half of all AI capital spend makes its way to Nvidia. And so everyone, rightly so, is fixated on their data center unit where you see most of that show up. And that was another thing to keep an eye on. Data center is a very, very slight miss, but data center revenues came in just a little bit below estimates for the quarter. So again, the thing that I would be watching for with this in particular, and with any high growth stock that I'm evaluating, is what does the rate of change in that growth outlook look like? And if it's starting to slow, that could be a warning when you're paying, an outsized valuation for these things.
Outsized valuation. So what is the valuation? What is the PE forward for Nvidia right now? I'm
I
looking
think it's
up at
around
Bloomberg.
40 or 41 times earnings.
Is it? I don't. I'm seeing in Bloomberg it's down to 32. Maybe they have accounted for the last quarter. I'm not sure. 32? Is it 42?
Don't know. Doesn't matter. I think
Oh,
32 is not bad for a stock growing revenues at a 50% clip. You can justify it, but if that growth look gets called into question, that you start to question what you're paying for next year for forward earnings if you're paying an above average ratio like that.
well, yeah. I bring it up because simply because the Nasdaq is basically at a 30. So
Right.
yeah, I mean, if Nvidia is at a 40 or a 32, you're absolutely right. It doesn't matter. The point is that it's not that much more overvalued than I would say the Nasdaq itself, of which it's 10% of the index. But the Nasdaq also is extremely high PE multiple. And you mentioned data center revenue. There was an interesting thing in the earnings report. They removed China data center revenue from its outlook. So, look, I was looking for what they were going to say about China. It didn't. It didn't look to me to be too promising. Actually, they were kind of wishy washy. We could, if we kind of geopolitical issues kind of settle down, we'll get 5 billion in revenue from the H20 on China. But they took it out of their outlook. I thought that was pretty telling. So let's see. I mean,
Well, you
how
just
is this?
how
Yeah,
do
go
you?
ahead.
Well, I was gonna say, how do you plan for that? I mean, there's like the Trump administration, flip flops on this issue of H20 chips and what they're going. Are they going to allow them to sell into China? Are they going to take a 15% cut of revenues? Like it's almost impossible. With these questions in the air, it's almost impossible to guide on that. So I mean, I don't blame them for excluding that because you don't know. But then that's another big point about this stock is that China, I mean, for them, China can be a huge opportunity. I think on the call they mentioned, it's a $50 billion revenue opportunity for them, but to what extent can they go after that opportunity? So if you are starting to see data center spend slow a little bit in the U.S., or if it's going to be harder for them to keep up that growth rate that investors are used to, you need that China market to help offset that. But that's another big question mark right now is if they can actually get that or not, and to what extent. And so that's just another uncertainty on the outlook, that geopolitical overhang of whether or not it justifies paying up, for that valuation to go into this name right now. Because yeah, I mean they're projecting 54 billion in revenues for the third quarter, but like you said, that excludes H20 revenues. That could be, what is it, 2 to 5 billion, so you throw that number in there and they're probably ahead of where analyst estimates are at. If they're not going to do anything, they're probably below. And here's the other thing. What's your take on stock buybacks? Because anytime I see a high growth stock like Nvidia and they're doing another $60 billion into stock buybacks, it's like, why would you not, if things are so good right now, why would you not be plowing that money into expanding your operations, whether it's factory R&D, whatever it is? Like why are you why are you spending $60 billion on a stock trading at 30 or 40 forward times earnings, whatever it is, when if things are so good right now, you should be plowing that money back into your operations?
My take on share buybacks. So over the last 10 years, when you slice the market up by factors like momentum and value, dividend yield, growth, right? We've heard of these. One factor is the share buyback. And where do you think over the last years the share buyback factor, meaning the more a company buys its shares back, the higher it's ranked according to that factor. Where do you think that has ranked over the last 10 years? Above value and growth or below from a
Uh,
performance?
I would assume maybe it's in line with a growth factor.
It's above. It is
Above.
above. And it's significantly above even just the growth factor. So share buybacks, they work, and I understand that. Yeah, I understand the thought process. Like, why are you? There's no better project to invest in investor cash in than just buying up your own shares. And uh, look, I mean, people cry about when companies dilute their shares. Like MSTR is going through this right now, and when we get into Bitcoin, I'll pull up a spread between MSTR and Bitcoin, which has been dropping like a stone. And I think a lot of that has to do with the fact that they've diluted um, their shareholders recently to buy more Bitcoin, and I think that has soured sentiment a little bit on MSTR. Even though like Bitcoin is off its low, MSTR isn't doing well. I think that's a sentiment thing from dilution. So it works the other way too, right? If you're buying your shares back, I think it's a good thing. I don't think it's a good thing to look for me if I'm looking for like big growth. I'm not looking for a company that's buying back its shares,
Yeah.
you know, 100%. But over time, especially with large caps, share buybacks is one of the best top three performing market factors.
Okay. Yeah, I again, if when it comes to the high growth space, I don't understand why you would not be why that trade off would favor buying back your stock if you have such great opportunities ahead of you. But at the same time, for Nvidia, especially, to the extent that they've become a geopolitical pawn in a standoff between the U.S. and China, maybe you're nervous plowing that money back into your operations. But again, if you're not, how does that impact the earnings outlook down the road? And that's where I would keep coming back to with Nvidia, or really, any member of the Mag 7 that has an outsized forward valuation, is what's the likelihood that they can maintain that earnings growth pace, because that's what's going to be needed to justify going into those shares, especially if you're a new buyer right here looking at a 30 or 40, whatever it is, 4 times PE with a stock trading near, it's all time high. Um, and one thing too with we were going to talk about with Nvidia and some of these other names, when we talk about the concentration of customers, but then also the concentration of these stocks themselves in the indexes. I think it's kind of interesting here lately how there's a Mag 7 ETF, MAGS, but then also the QQQ, like the top 10 names in QQQ, which are the usual suspects. They make up 50% of the ETF, and it's slight, but it's starting to lag a little bit. This had been a leader, and now, especially after Powell's Jackson Hole speech, where you would think a dovish pivot on interest rates that would benefit some of these high growth names, but QQQ is not making a new high, and it's starting to lag a little bit relative to what the S&P is doing.
Yeah, and I find it actually pretty strange that that is the case. I'm going to share a chart with you on QQQ fund flows. So that's money pouring into QQQ, but I'm going to do it relative to the SPY. So this is my chart of the QQQ fund flows minus the SPY fund flows on a daily basis. So we have these daily changes up here, and here's the cumulative on a trailing basis here. On a trailing 20-day basis, actually. So what's interesting is that you're mentioning the weakness in the Q relative to the SPY, right? to the S&P 500.
Right.
You look down here all month long, the accumulation of flows relative to the SPY has been positive all month long. So they've been pouring money into the Q, not so much into the SPY. And that, even though the market topped out a little bit in the Q, we had like a 1 week, little blip, maybe a seasonal dip in the market. It was like a 2% dip a couple of weeks ago, right? All the bears thought, okay, we're going to come in here, right? We're going to get our 5 to 10%. And it was like a 3 day thing, and that's it. And now Nvidia has subpar earnings full of risk for the future, and the market is basically up, right? Completely almost retraced. Is it actually up already on the day? I'm not even sure, but Nvidia is now trading at 181 a share, as if nothing happened last night. So I don't know. These Q flows are pretty interesting, even though, like you mentioned, from a performance point of view, um, it is, it's off its all time high, and the S&P 500 is at its all time high.
Yeah, that's something I would watch on the cues right here. Is if it looks like they peaked out around 580. Right now, trading at 573. The key level to watch there is if that. Actually, I'll just try to share my screen really quick. Might be a little easier.
It's just amazing how traders usually go into these earnings reports betting that something big is going to happen. And I think so far, the Nvidia reaction tells you sometimes you can make a lot of money by betting that absolutely nothing is going to happen by selling option premium.
Yeah. Let's give a round of applause for the real winners today, which is the Nvidia option sellers, right?
Exactly. Exactly. What did you guys do for that trade, by the way?
We did a put spread yesterday. We're not trading anything around Nvidia or the Qs right now, but this is a level I would watch. So this is what I talk about with QQQ. Not it's a slight divergence, but it's off its prior high. Even as you get the S&P, and the average stock, you look at the Dow or small caps have been rallying. This is off its high a little bit, but this is what I would watch now: is that you have almost like a little head and shoulders pattern forming here, in this neckline, this support level you'd want to watch around this 560 level. And I bring this up because it's right in line with the 50-day moving average. So, that's going to be a pretty important area of support near term. If we see some weakness follow through with Nvidia and some of these other Mag 7 names, if that starts to weigh again, because these names are like 50% of the Qs, if that starts to weigh on the Qs, that's a really key level to watch. And if we finally get some of the what's historically bearish seasonality from here, on a post-election year, from here through the start of October, this would be the level I would watch as a trigger, as specifically on QQQ.
Yeah, the 50-day. And we discussed how the skew in the SPX in the option market for the S&P 500 is getting really interesting. Right, they're selling front month volatility, buying back month volatility. So like November VIX, October VIX, and you pull up that chart of the Q, and it's like it just looks so tightly wound. Like anything could like trigger an unexpected like 1,000 point dip, you know. And I think one of those, Nvidia earnings isn't going to do it. I don't, you see the reaction. Option sellers are buying everybody a round of drinks today. What I think is going to get the market truly down is an unwind of this volatility trade, and that would come, I think, from a macro data surprise of some sort. Maybe we get that tomorrow. You know, we have, I think, like three inflation reports before the September 17th FOMC meeting. We're going to have PCE tomorrow, and we talked about that yesterday. Uh, the producer price index is on everybody's mind because it blew out analyst estimates. So we should theoretically see some of that come into the PCE tomorrow. But after that PCE tomorrow, we have a couple of more inflation reports. It's like waiting for Godot, right? When is the inflation going to tick up? When is the so if we see that, and if the September rate cut comes into question, maybe that's a trigger to get that Q below that 50-day moving average.
Yeah, if so, that one thing that you can look for is, all right, what's the market getting its hopes up over? What's the market starting to price in? Where is everyone starting to bet on the same side, and where can you take the opposite side of that? And I feel like more and more, to your point, you're seeing the bet skew toward rate cuts. We talked just very briefly about the 2-year Treasury yield yesterday, that it tends to lead what Fed funds is doing. You can see right now, like the market is getting its hopes up over rate cuts, and that 2-year, it's pricing in what it knows at the moment, which is that we had rising inflation reports recently, but we also had a really weak labor market report, and so the flip side to that is, yeah, if we continue to see inflation coming in hot, what happens if it looks like that July payrolls figure was a blip? What happens if you have the August number, which should be released next Friday? Especially with a new BLS head in place to massage the numbers, maybe. But what if that number all of a sudden looks really strong? Then what happens with that outlook for rate cuts? So I think that's the biggest risk facing the market right now, is that this dovish pivot by Powell is in reality like a one and done kind of thing. That they can only really cut once in September, and they're limited from there because their two mandates, labor market and inflation, are preventing them from being able to really do anything else. And along the lines of inflation, just one thing I want to bring up to everyone watching. I don't know if you ever look at the Cleveland Fed. If you just search this up, the Cleveland Fed's inflation nowcast. They put, it's similar to the GDP now, but they put together a real time estimate of where inflation is coming in. They do it for the CPI, but they do it for the PCE as well. And they have I'm not sure where the economist estimates are at, but they have right now a core PCE number tomorrow coming in at 2.89% for July. But they're also putting an August estimate together. So for this month, they have that rising to 2.96. So again, the estimates that I'm seeing out there right now, and this is coming from the Fed. So this should be data that you would assume the Fed is looking at behind closed doors when they're talking about policy and they're having these meetings. They have this report in front of them, and it says that inflation is rising. The core PCE, the thing we care most about, the thing that we want to keep at a 2% level, our data is actually showing this rising to 3% this month. And so that's why I say that this dovish pivot, dovish tilt by the Fed might be short-lived or just severely limited to one rate cut in September, depending on, especially then after this, how those payrolls figures come out.
Yeah, I love that. And here's a chart of that. Look at that. That's the Cleveland Fed now casting the core PCE on a year-over-year basis. Has ticked up.
Yeah. What part of that trend is screaming rate cuts to you?
The only thing screaming rate cuts is Trump. That's he's
right.
the only one screaming. And mortgage brokers.
Yeah.
Brokers are screaming rate cut too, right?
Yeah. Whoever does that,
certainly.
whoever does that inflation nowcast is about to lose their job.
That's right. Well, maybe he doesn't know about the inflation nowcast, so
Yeah.
their jobs will be safe. But it's all a joke. It's such a joke, right? It's I guess it started as a joke. Now it's not that funny anymore that he's like firing people and really going after the Fed. And the Fed, maybe somewhat to their credit, are trying to fight back a little bit. Um, I know a lot of people think that Jay Powell tacoed himself at Jackson Hole, and kind of gave in to Trump. But I don't know. Maybe he didn't. Maybe he's just, you know, thinking that we should get a rate cut. I'm not sure. But at some point, I think there's going to be like a battle royale, like a three-way battle royale. The market against the Fed against Trump, and Trump against the Fed. And that's all coming up, I think. So aside from Nvidia, right there were other earnings last night. Snowflake, one of them, and I think you can make a case that maybe the Snowflake earnings report is more important for the market's next move than maybe this particular Nvidia report. Just because a lot of these companies like Snowflake and Datadog, um, and all of these agentic AI related companies that were supposed to be the next, kind of take the mantle and carry the AI trade forward, just have been completely underperforming uh, the market, and have been completely underperforming Nvidia. And here you go, Snowflake came out with an earnings report, and the stock is up 13%. So, what do you think is?
Are you telling me Snowflake's the new Nvidia?
I don't know. I don't think it's Nvidia, but maybe that's the new. Maybe that's the new trade.
I
Go.
yeah, yeah. So I mean, I would agree with you that you can watch some of these names for market clues on, is the AI trend, how is the AI trend evolving, and are companies finding use cases for it? And I think that's an interesting point to bring up
That's a
right
great,
now
that's
because
a great point. That's a great point that you just made brought up.
well, did you
Are they
see
finding
that?
cases?
Did you see that MIT study recently?
I did.
All right, so an MIT study. I don't want to butcher this, but an MIT study finding that something like 95% of the capital being spent on AI is not going to generate a positive return. That's a
You're
bit.
not the only one. So there are a lot of these reports coming out now. A lot. So this is, I think, probably the biggest story in AI right now developing.
Yeah,
If they're not finding use cases, I mean, the AI spend. If you're a CEO, right, and you're spending $1 billion on AI for your company, hoping for all these amazing efficiencies, and where it improves both your top line and your bottom line, and you're all in, right? Because that's where the hype is. You're all in, and you want to show on your quarterly report that the company is investing in AI. All of a sudden, you come in, and you're budgeted to see like a 1 billion swing in your profit margin, and all it is like $50 million or something. Are you going to spend more on AI next year?
Yeah, I mean that's that's a great point. I mean, that's look. If I can only assume that if you're a company and you've just reported earnings, like if you have to at least mention AI on your earnings call. Like I can only imagine the sell side analyst reaction, because I used to work into that. If you did not mention AI on your analyst call, then I'm coming after you in the Q&A and figuring out what you're doing with AI. It's just like AI is such a buzzword. Everyone's supposed to be using AI, but now you've got these studies coming out and questioning, the efficacy of, is it really going to be a benefit to the bottom line or not? And that's one area where you can again watch some of these software as a service companies operating in different segments. I can't remember Snowflake's in market, but you got a lot of the cybersecurity companies as well that we were talking about before the call. But yeah, I mean, watch those things, because yeah, if they're finding a use case for AI to sell to their enterprise customers, then that should be benefiting those companies. But this is just, it's just funny to come out and see this MIT study about companies not making money on AI. It's just kind of another echo, so to speak, from the internet bubble, and trying to find use cases for the internet and online storefronts and all that. I mean, look at how long it took for, there's a lot of promise early on, but look at how long it took for all that to finally come to fruition. And one other thing I wanted to mention too, as it relates to all this, call it bubble talk and this MIT study. Have you seen the resurgence in SPACs and IPOs starting to come back? Because that's another area to watch right here. And this was the most striking thing to me. What?
Oh,
what
I knew that was happening as soon as Circle came out with an IPO and the stock jumped above 200. Even when it jumped above 100, it should have never been even at 100, and it has come off quite a
yeah.
bit from its peak. But
Do
when
you,
I
do
saw
you,
that, I'm like, okay, this IPO thing is back, and people are going crazy.
the,
That's why
the
I've been
most,
telling Larry, bank on crazy. This is what I'm talking about.
Yeah, so the most striking one to me, you had so SPAC, special purpose acquisition corporations, mouthful to say, but it's just another, it's basically a blank check company. They go out and they raise funds and then they go looking for an acquisition. Now they probably have obviously something in mind that they want to do or acquire before doing so, but essentially if you're when you raise funds, like you're giving money into a blank check structure. And usually, up until at least recently, they've been less regulated, so they get away with more in terms of what they say in market. And these things were huge in 2021. I can't remember the guy's name. He was the SPAC king. I don't know if you remember his, if that rings a
Yes,
bell, like
yes,
Chamath or whatever, something.
yes,
Anyway,
yes, yes.
he fought. So his SPACs collectively lost investors a lot of money in 2021. We're in the aftermath of all that, and now he's back. He just filed to form another SPAC, and literally in the filing, because he lost investors so much money before. In the filing, the exact words he uses is, "There is no crying in the casino."
Yes, I saw
That
that.
so I mean, like, come on, like that. What
Right,
stage, what
he's
stage of the
right.
market? What stage of the market are we in when you're filing something with the SEC saying there's no crying in the casino?
Is he wrong?
He's not wrong, but the fact that
That's
people are plowing money into these things tells you
yes,
everything you need to know about it.
that's everything you need to know. And you know what? I'll actually, since you mentioned, I'm going to pull up the SPAC index. Look at this thing. This thing is crazy. But
Is it taking
I thought
off?
that, yeah, I
I
mean,
mean, I
everything
don't
is
know.
taking off since April.
I don't know how far it goes back, but I mean, you go back to like 2021, the thing probably crashed out by 90%. Now it's heading back higher again.
I think it's up more than 50% from the lows. Yeah, 60%. 60% from the lows. SPAC index.
Yep.
The market's back.
Isn't it Trump's sons?
Let's dance.
They filed for one as well, I believe.
Hey, why not? As long as the music is playing, we
You got
shall dance, right?
to dance.
We shall dance. But yeah, that Cleveland Fed thing you mentioned and we put up on the chart. That's let's see what tomorrow is going to bring. I'm sure the market is going to spin it, even if we get like a bad number tomorrow. I just feel like they're not ready to let go. It's like, I don't know, it's like a bad relationship, you know. You know you need to get out of the relationship, but you just stay in and stay in. And I think they're going to spin it because they're going to be like, okay, well, it's just one data point, and we have two more inflation reports coming up, and they'll spin it.
Yeah, it could be spun as a one-off inflate or tariff impact, and it'll go away when all
They'll
that
spin
settles down, right?
They'll spin it right before Labor Day. Nobody wants down 3% S&P. All right, so the goalies are going to come in, as Larry says. The Air National Guard is going to fly in, right, as Larry likes to say, and kick save the market. I'm sure that's going to happen.
So
So
one,
I'm
one,
actually I'm
one.
actually looking for that. Like, I want to sell the market. I do. Larry says I'm always a bull and whatever. I see it coming, but I also see this like unwillingness. This like I don't know if it's a psychological thing of the market or there are these like weird little green men hidden somewhere in the you know in the market that just keep just holding things up. So I don't know. We gotta wait. I don't
The
think they're
one,
gonna crash it tomorrow.
yeah, one thing we haven't talked about. So what I'll if there's one chart that I'm going to be watching after tomorrow's inflation number, because this chart, if there are going to be negative inflation surprises to the upside, meaning inflation is becoming worse than most expect, I would expect gold to move out of this 4 month consolidation that it's been in. I mean, this thing has just been
Oh, yeah.
grinding
Yeah.
sideways in a tighter and tighter range, and it's coming near, getting near the apex of its pattern. I think, gold. A lot of people, we talk about gold as an inflation hedge, but where gold tends to really shine is when you're getting the big upside inflation surprises. And right there. If
Look at that. I mean, this is like for bears, this is a bear flag. For bulls, this is a bull flag. I don't know what flag this is, but I think this thing's about to break out.
Yeah, if that I it looks like it can obviously it looks like continuation of the upside. Usually, when you see these triangles form like this, they'll resume in the direction preceding the pattern, which in this case was higher. But yeah, I would take this as a signal, so to speak, that if gold, especially after tomorrow, if gold breaks out to the, I mean, look, you can. This is how again you can use price to help inform a view of the market. If gold breaks to the upside of this pattern, that signals to me that there are inflation surprises to the upside ahead. If gold breaks down and pulls back out of that pattern, then maybe these inflation recent reports are a one off, or the upside surprises aren't as bad as what the market thinks they're going to be. But that's one thing you can kind of watch with this pattern right here with gold, and how a break out of those dash trend lines can inform a view of what the market thinks is ahead.
You know, the other thing with gold, I saw a statistic yesterday where gold, central bank holdings of gold have exceeded holdings for U.S. Treasuries for the first time in decades. So, you start looking back decades and you start thinking, well, you know, the market is up a ton this year from the lows. Everybody forgot about the deglobalization and de-dollarization theme from the first quarter, from the second quarter after Liberation Day. Right? Everybody forgot about that already, but the central banks haven't forgotten about that, and they keep buying. And now gold holdings, central bank gold holdings, are have exceeded U.S. Treasury bond holdings for the first time in decades.
For non-U.S. central banks.
Non-U.S. central banks.
Interesting. Yeah, I mean, how much? Look, how much of that reflects too on just uncertainty over on the geopolitical side? I mean, you don't. There's so much you don't know that's going to happen with U.S. relations, as we've seen this year. It can be, you know, one side or the other. Why, holding treasuries versus gold? Why not hedge yourself and take away that sovereign debt risk?
Yeah, gold. Gold has something I like to say has asymmetric upside risk. Like regardless of what scenario, macro scenario is at play right now, I think it all kind of favors gold. Whether if they don't cut rates, why wouldn't they cut rates? They wouldn't cut because of the inflation story that
Right.
benefits gold. If they do start to cut, you have lower yields in the front end, higher in the back end, yield curve steepens. Gold does phenomenally well in that scenario. And you go back to the de-dollarization, deglobalization theme. Well, that's also gold. So regardless of what's an economic scenario is at play right now, it kind of all favors gold. And we're talking about inflation a lot. Check out Albemarle, ALB, Lithium. It's a lithium stock. It's been
Look,
beaten down. It's been beaten down like crazy. And there's a report out that there's widespread and prolonged supply interruptions in China could affect as much as 15% of global lithium production. So, if it's not one commodity, it's another. Lithium has gotten killed recently, but now off its lows. Albemarle is off its lows, has broken out of all its moving averages and whatever. What do you think about that stock? What do you think about these beaten down commodity names?
yeah, I don't, I have not, I know Albemarle, I have not looked at it in quite some time until you just mentioned it, but commodity to commodity or producer to producer, I the big picture I would keep an eye on with a lot of these things is this is a kind of another signal on where we're at in the cycle, and it's that commodities tend to be a late cycle play, just like they were heading into '08. Actually, I mean, commodities did extremely well up until the middle of '08, while the rest of the market was starting to melt down a little bit. So, Albemarle. So we've already seen this move in gold. We've seen a move in silver. We've seen a move in these uranium producers. We're seeing moves in these rare earth names, MP Materials in the U.S. Linus, it's listed on the Australian exchange. Those are rare earth plays. Yeah, if lithium starts to go, if copper starts to go, I mean, it's kind of like the dominoes on this commodity trade. If you start to see the broad commodity indexes start to go, that tells me two things. One, that's another warning on the inflation outlook, but that's just another sign that we're getting late cycle. Like someone coming out with a filing saying there's no crying in the casino. That's a sign of where you're at. Like commodities, if commodities start to break out right here, and as you're seeing with the individual names and some of the certain more specialized commodities, if we start to see more broader commodity theme emerge, that's just another sign of kind of where we are in the cycle, just another a late cycle signpost, so to speak, is how what I would be looking for there. I think, are you muted, Eric? I can't hear you.
I was muted.
There we
I
go.
was muted. Uh, I was going to say it's 9:12. You know what time that means? We got to discuss the straddle, right? We have to. And so, what do you think it is? What do you think it is right now?
I don't know. I mean, should be a pretty quiet day to day. We've got Nvidia behind us, and it's the moves in nothing burger right now. I would say it's right around 20 again.
Yeah, 21.
21.
21. Good. Nothing to see here, folks. Nothing to see here. 20. So, are we going to hit 6,500 big round number on the S&P 500 today? Are we going to do that? I think there's a good shot. You look at the market. You compare it to a rubber band. Everybody's heard that analogy. It gets stretched. Well, it got stretched a little bit last night, all the way back up. So S&P futures dropped maybe 30 points down from their peak last night. So maybe 30 points up. That would bring us into the 6,500 area. So,
Yep. The thing I'll be watching closest today and into next week is what is QQQ doing relative to SPY. That'll tell you everything you need to know, I think, about the near term direction here.
yeah. So it's gonna be an. I'm just looking at the option pricing. 65.15s. Okay, 65.15 calls have a bid on them. They're trading at a dust, so that's in play. The market is looking for a move here. I think. I think to the upside and looking to rally into tomorrow. That would be an interesting setup fade that. But you have Labor Day in play, so I'll let you have the last word. If you have anything else that you're looking at for today, let us know.
Yep. So on the equity side, what I just said, watch SPY made, I think, a marginally new high yesterday. If we do extend up to 6,500, keep a close eye on what QQQ is doing, if it's confirming or not. And then the aftermath of that PCE inflation report tomorrow, watch that gold range.
Yeah, I'm watching Snowflake and related stocks, agentic AI stocks. I mentioned I'm watching Albemarle, and I'm always watching gold as well, right? Always watching gold, always trying to get long. So we'll leave you with that. Thank you for joining us today. Join us tomorrow. Is Q&A with Larry. So Larry will be solo tomorrow, and thank you for joining me these last couple of days. It's been a pleasure, as it usually is. Great insight. Have a great weekend, Clint. Thanks.
Sounds good. Appreciate it. Great being on. See ya.